about introduction what important account. The financial information this is because it can able to provide about result and balance finance. It more can be certainty of all information that can help management of company. Next is can avoid loss. This is because it's easier to identify cash flow out and in, and can be easily identified if have regularly recorded account, and also can reduce the risk. This also can make analysis and planning. Financial information and non-financial will be started periodically for the managed knowledge. Here there is more properly and profitably or otherwise. These two can also include more in-depth analysis. This also includes the objective, which to complete in orderly manner, and many more interesting the concept to provide. It's also combined with idea and context.
The first thing we need to do the general is to record business transaction. We make use of a ledger book with many accounts. Every time we record a transaction, we will debit one account and credit another account. This recording system is called double entry bookkeeping. All the accounts are booked under asset, liabilities, capital, revenue, expenses. By tradition, assets and expenses are debit in nature, debit when interest. Capital, liability and revenue are credit in nature, credit when interest. For example, 2 October 2020, rent 15,000 debit and cash 15,000 credit.
After we finish the journal, we can begin to make a ledger regarding the journal. Every time we record a transaction, we will debit one account and credit another account. For example, we record computer account in capital account at credit because capital, liability and revenue are credits in nature. Next, we record capital account in computer account as debit because we must do it opposite from the capital account. After that, we list down the higher amount at credit and then close it using CD, which means carried down at 31st October. And then use BD, which means brought down, to start the account for 1st November and to show the balance brought down from previous month.
The first thing we need to do to make a trial balance is to put a title at the top, such as putting the name of the company if any, and below it should be put the trial balance as at 31 October 2020. After that, make 3 boxes, then divide it into items, debit and credit. Before that, to make a trial balance must be based on the ledger. Then, fill in the debits and credits by category. For example, cash is in the debit category and is followed by the following. After completing the filling, the debits and credits should be total. The amount must be balanced for both debit and credit as in the table, which is 764600.
Next is a profit and loss of trading and profit and loss account for the year end 2020. First, sale 100,000 and 39. Gross profit get the same with sale 100,000 and 39. Second, expensive. Depreciated expenses is 20,000, rent 15,000, next salaries and wages is 6,900. Utilities for electric bill is 1,800 and utilities for water bill is 3,500. Lastly, net profit that we'll get it is 91,500.
Balance sheet as at 31 October 2020. Fixed asset, computer 100,000 less additional equipment 20,000 equal to 80,000. Current asset, debtor 52,000, cash 544,000, 600, accumulate expenses 20,000 equal to 616,600 less current liabilities creditors 500,600 will get working capital 611,000 80,000 plus 611,000 will get 691,000. Financed by capital 600,000 at net profit 91,500 less drawings 500 will get 91,000. 600 plus 91,000 equal to 691,000 is the same and balance.
What are the uses of a balance sheet? A balance sheet explains the financial position of a company at a specific point in time, as opposed to an income statement which reports financial information over a period of time. A balance sheet is used to determine the health of a company on a specific date. A bank statement is often used by parties outside of a company to gauge the company health. Banks, lenders, and other institutions may calculate finance. A company can use its balance sheet to craft internal decisions, though the information presented is usually not as helpful as an income statement. A company may look at its balance sheet to measure risks, make sure it has enough cash on hand, and evaluate how it wants to raise more capital.
The usefulness of the statement of profit and loss. P&L statement is one of the three types of financial statements. The other two are the balance sheet and the cash flow statement. A profit and loss statement is one of the three types of financial statements. Investors and analysts can use the information to evaluate a company's profitability. If the business is seasonal, the income statement can also show which months are more profitable for them. In addition, the P&L account also describes different business activities, such as revenue and expenses, especially in assessing risk. Finally, profit and loss accounts allow enterprises where they can improvise to increase revenue streams and reduce costs.
Conclusion. Basic accounting refers to the process of recording a company financial transaction. It involves analyzing, summarizing, and reporting this transaction to regulators, oversight agencies, and tax collection entities. Next, accounting information is summarized in the financial statement, which supply an overview of the financial activities of business among a period such as cash flow, income and expenses during the year, as well as information about its financial position on a specific date. For example, the amount of cash and inventory at the end of the year. Next, accounting is a service activity. It is important as it provides quantitative information of financial nature to various stakeholders, which is intended to be used in making an economic decision. In the opinion, the owner needs to find and appoint someone who has qualification, knowledge, and skill in helping him applying the accounting system properly in the management of the business to ensure that a good management and financial system.